Hello traders, welcome back to my channel. In this wonderful video I'll be sharing with you this amazing entry technique which is known as the Trendline Breakout strategy. I'll be sharing with you guys mistakes in which traders usually do. Not all types of breakouts are real breakouts, so I'll share with you the confirmations to look in order to catch those amazing breakouts. So you'll basically be seeing this as a cost outline. We're looking at the recap on it, identifying the breakout confirmations, how exactly to enter when we spot a breakout, where we should be placing our stop loss, our take profit 1, take profit 2, and all of that, how to know what real fake outs or real breakouts, so that we should avoid fake outs. Many people don't know the difference between real breakouts. That's why you get stopped out most times thinking that price has broken out, in which it has not yet. So we want to watch this video to the end.
Okay traders, welcome to my channel.
I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the Forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
Okay, so now basically when we talk about trend lines, we need to first of all understand what trend lines are. Okay, that's just a recap. Normally trend lines are simply a form of diagonal support and resistance where price usually tend to find rejection around those zones. Okay, so if you see a zone in which price has been rejected in more than once in a diagonal manner, it turns to you can use our trend lines to use them as support or resistance. So we identify situations where price actually breaks out from a trend line, meaning after expecting a trend line maybe for a few times, right, price will finally break out from it. And when price breaks out of this trend line, what happens? It usually turns to have a very violent move to the opposite side. Okay, and in this situation you can catch very high rewarding risk to reward ratio trades like this, for instance, because when price rejects maybe once, twice, thrice, and it can move very powerfully. So if you are able to identify these zones here, then you are able to catch this kind of move, and I'm going to share with you the confirmation in which I usually look to. Right, okay, now this is an example of a New Zealand US dollar here. Right, we have connected, use our trend line, and we have connected. This is price rejecting from this zone. It creates a high, it comes back, get rejected. And remember, if you have not watched my videos on how to draw trend line properly, then you might want to go and check. You connect the first troughs, you connect to the second trough in a situation like this, and then you just drag up. Right, so when you drag up, you realize that price comes after rejecting once and twice. People who are trading trend line will be looking for confirmation here to be buying. Okay, but when price comes now and reject, what you do now, you are waiting for price to actually break below this trend line. Okay, so what you do now is you wait, like in this situation. Okay, you are going to wait for confirmations. Now you see that we have candlestick that has closed below this zone here. That is a trend line a breakout. But are we just going to jump in? Right, we are going to see if we have a confirmation, because there are times where price might come back and reject. Now if you look at this zone here critically, you are going to realize that we have a rejection, a very good rejection here, that confirmed that this trend line here was actually holding. Right, so it meant that price actually came and got rejected in this trend line, which is kind of inducement in one hand, because people will be looking for many buys here. All right, so people will be looking for many buys here or looking for buys here because price has rejected with a strong wick under. This is one confirmation that you should be looking for. Now once you see that price comes back again and close below, right, then it's a confirmation that it's a breakout. There are times where price will just come like that with a strong candle, just break below without first rejecting. Those kind of breakouts might not hold, but if it comes and reject, first of all, it induces people and maybe grab liquidity above there, because people will be buying and then they'll place in their stop loss. Then if later on price comes and break, now you wait again, sometimes price will come back to retest the trend line. Right, and that is the confirmation that we are going to be looking at according to what we saw in our cost outline. Okay, so now you see now that after rejection, price come back close below, and what do we do? Wait to see if we can get another further confirmation. Okay, if you look at it very well now, you see now that we have what, these bearish candles that are broken below, and price has wasted a little bit of time below here. Okay, now you can see here we have very strong bullish candle that move below here. All right, now in this situation, what you do now is you sell. Right, when you sell now, your stop loss should be what? Your stop loss should be above this zone here. Remember, this is the candlestick that led to this breakout. Now you mark out the candlestick body. This is the candlestick body that led to this breakout. Okay, so you mark out the body and then you look at the zone like this. This is the zone actually, so you enter and then your stop loss is above there, right? So when you place your stop loss above there, where should you be targeting? You should be targeting these previous lows. This is a zone where you should be targeting, right? That could be one target there. Okay, that could be one target. We have this could be another target. All right, now talking about targeting, you can also go to a bigger time frame like the H4 time frame, and then you look for what? You look for rejections, or you look for zones where price has rejected many times, but however these previous lows here can act as what? Support. So this is the previous low that led to this strong this complete move here. This is the low that led to this complete move here. So that will be our last target. Okay, so our first target should be this zone here, right? Then we'll be looking to target these zones, and then this should be our last target, because price will definitely fall like that. Okay, so in this situation, what you do now is you just enter. Your stop loss should be what? Above these candlesticks here that led to this breakout, right? This is it. Your stop loss should be above those candlesticks, and then your first target should be around this previous low, because this is a rejection zone. Okay, and then your first target should be here, and then your last target should be at this zone. This is the zone. Remember, this is where the trend turned from a down to an uptrend, right? So you want to place this to be your last target here. All right, and you see that you're going to get like a 1:5 risk to reward ratio trade. And then what happened? Let's see. Okay, that's target one hit already. All right, as you can see there, target one have already been hit, and then we are expecting that price should make it to our second target, right? I notice the kind of strong bearish momentum candles that form after the breakout. Now this is the advantages of breakouts. This is based on violent breakouts, and you see that once price start moving, you can already move down your stop loss. Most times when this is a breakout, price will not even pull back again, so you can just easily move out, move your stop loss below and all of that, right? And you see that you are risk free. You will no longer be a risk. Okay, now you can see exactly that price has hit this zone. So it has hit the zone here, it has hit the zone here. So that is how you should identify, or how you'll be able to look at breakouts, and then you look at confirmation to enter. Now there is something I have to share with you guys, right, which has to do with confirmations, right, which has to do with confirmation, trying to know if the trend line is going to be real or is going to be fake out, right? There are some things that can really give a trend line a stronger, or a breakout to be a stronger breakout, that you can say this is a strong breakout, that is a high probability that you hold, right? Those are the confirmation I actually talked about. So you see now price are headed right down. All right, now let's look at it. Okay, so you go to the bigger time frame when you want to do a confirmation or look at a breakout to be confirmed. What you should do now is you should identify what? Turning points now, or support and resistance zones. Now the reason why this trend line is very the trend line breakout is valid is because, number one, I identified what this support, I identified this previous high here, right? You see now that this was a previous high that price created, and after moving down, price came back to reject on this previous high. So when it rejects in this previous high, it means that in a smaller time frame there will probably be what? Strong down momentum. All right, now once you identify, now based on the smaller time frame, you identify a trend line breakout, you know now that this trend line breakout is not just coming from a normal trend line breakout. It's because we have a rejection in the bigger time frame. All right, and we have this rejection in the bigger time frame that will actually push price down, right, which would be, I know, like something like a double top in a bigger time frame. So it just completed the second high that was created to lead toward a down move like this, which was probably going to move right down to this zone here. So that is what made the breakout confirmation. Now the second confirmation, which I mentioned earlier, was that one we have a situation where price actually first got rejected right? So price got rejected at the trendline zone which we had earlier. So we had this rejection, which is in form of inducement, showing that many people will be entering, buying here and with their stop losses here. Alright, so when it first induced like this, it means that it identifies the fact that there is a diagonal support here. So when it goes up a little bit, comes back and break down, then now you will be selling now based on what our candlestick confirmation and our bearish momentum, which will now lead toward that down move. So those are some of the things you should consider. Price will not just turn like that easily. Price will not just turn like that easily. There should be a force, either a strong resistance zone like this one up, and then we also have what a candlestick confirmation that will lead to price. And also you don't trade trend lines that are too, or breakout that are too gentle. All right, if you see trend lines that are too gentle, maybe sloping like this, then I will not be considering trading them. For instance, this a trend line like this, I might not consider trading it. Look, I'll consider this to be a breakout down, okay, because it's a little bit sloping, it's a little bit steep. But a trend line like this, even though it held, this is not kind of trend line that I'll be trading, because it's very gentle, and gentle trend lines are usually very difficult to break through. All right, so this is some of the confirmation you should look for when trading trendline breakout. Don't just open your chart and you see trendline breaks and you just jump in. Look at whether you have a support or a resistance zone that is will push price. You have a chart pattern like maybe a double top confirmation that's been broken through and price is going to move down. That is in the bigger time frame. And then you also identify now in the entry time frame, is it extra, do you have bearish or bullish candlesticks and all of that. That will increase your probability, but it doesn't mean that you will not still lose. There are times where you have all of the confirmation but trade will still move against you. That's why we usually use what stop losses. So thank you for watching. I hope you found the video helpful. Please make sure that you subscribe to the channel if you are new by hitting on the subscribe button and notification bell. Also make sure that you join our Telegram channel. The link will be in the pinned comment and in the video's description below. See you in the next video.